Hi everyone and welcome to another live trading series. It is Monday, September 12th. It's 12:15. I just got back from the dentist, so I'm going to try to do a few trades before I get back to work. I have a small agenda here. I'm going to sell an Apple covered call in my tax-free savings account. I might sell TQQQ covered calls for the weekly expiration. My Tesla poor man's covered call is in the money and I want to roll it. I might do Square calls. I'll show you my thoughts on those. I'll do Google calls because I'm losing money on Google. They don't pay dividends and I have the shares, so I want to earn something on it. If you look at the market right now, opened up very green. Everything's kind of going down. Not a big deal. I'm going to wait for AMD to get, I don't know, back into the 70s or 60s. Like last week, I think it bottomed out at 77, which I don't know. I think we'll go back into the 60s if things keep dropping, but we'll see what happens. If I start off, what am I going to do first? Apple TFSA. So if we look at Apple in my tax-free savings account, so I have 100 shares. I bought at $70. Right now it's $162. I don't have any options on it. My option expired last week. What I usually try to do is aim for at least $100 on Apple. So $100 at $7,000 cost basis. I'm making 1.4% per month. Plus I get like 0.5% dividend. It's not much, but I don't want to lose my shares. So I go around the 20 delta. So we'll take a look. I like to do like 30 days to expiration. I like the monthly expirations. So we'll go October 21st. We'll look at delta. So we'll look at the 23. That's the closest one I can find. And it's at least $100. I have two criteria, $100 and like 20-ish delta. What this means is I have 23% chance of losing my shares or 77% chance of success, if my math is correct. Yeah, so I have it lined up right now. And I'll just sell one at 75. So you could make more money by selling at 170, but then 33 delta, it's like a 67% chance of success. I know it's more money, but Apple could go to 170 in a month, less likely to go to 175. And then I could just, it'll be easier for me to roll it. So I'll just click sell to open. This is my TFSA. And then we could see what it looks like. It'll sell right away. I like to do market order just so it gets filmed on video. Let's go like this, I guess. So covered call. So you can see 39 days to expiration, which is fine. I try not to go more than 45. In this market with riskier trades like Tesla, I try to do 7 days to expiration because you can't really predict and you don't really know what's happening. TQQQ. Yeah, I don't think I want to do that. It might be just too risky to do a covered call. So I'll do Google calls and I'll show you how much money I'm losing on Google. Oh, I have an Apple. Okay, so I have an Apple poor man's covered call in my tax-free savings account. For those who haven't been keeping up, I know I've been filming a lot of videos. It's hard to go back and watch all 90 of these trading videos. So you buy a deep in the money leap. So I bought this 2 years ago. I have 130 days left and I will end up owning the shares. You buy something in the money like the 90 delta, which means it acts as if it's 90 shares. Right now, if you take a look, it's 99 delta. So obviously this means like 99% chance of success, which is fine. It mimics 100 shares so that if I sell something, let's say this is 160. Right now, Apple's at 162. If I get called, it's not a naked call. I won't be short 100 shares, which is risky. I have this as my protection. So it's a little more capital efficient. Instead of buying 100 shares right now at $16,000, you can buy a call for $6,000. So it's just capital efficient. I am going to roll this out because I don't want it to get called away. What you do for rolling, you can either do it in 2 steps. Questrade doesn't have a roll function. What I like to do is just do a diagonal call, I guess. So you go diagonal call. You have to buy back the exact one you sold. So buy back September 16th, 160. And then I'm going to roll out another month. Hopefully I can sell further out in time and still make money. So yeah, so you notice how this has a credit. So I'll still make money even though I'm still in the money, if that makes sense. So I'll try to find the midpoint between these. So I'm rolling out further out in time. I'm buying myself another $500, another 30 days. So right now, if I get called if I get called within the next 4 days, because it expires this Friday, it'll be $16,000. But since I'm rolling it out to 165, that's another $500 because I'd get 16,500. If that makes sense. Yeah, let's just go like this. Sell to open, buy to close. So this is how you know you've done it properly. Buy to close, I'm eliminating my obligation, even though it is in the money. Chances are you won't get assigned early, but even though I have 4 or 5 days left, I just want to close it. I don't know, just so I can film it. This should get filled. Let's take a look at Google. I'm losing a lot of money on Google. So I thought Google would go up. I bought 200 shares. Google's down a lot. I'm down 7,800. But I've been slowly chipping away monthly and making like $200 a month on these. So I sold September 16th, 125 calls. Google right now is at 110. So obviously I'm losing money. But what I will do, I'm not going to do a diagonal call. The chances that Google will go from 110 to 125 within 4 days, extremely unlikely. So I'm going to just sell 2 more calls. So it'll be like 2 naked calls pretty much. But I am not worried about Google jumping up that much. Ooh. Yeah, see, this is bad. I sell a month. Man, this is annoying. I'm making $50 a contract. I'm making $100. This is my fault. I don't want to sell. I don't know. Let's take a look at what the delta says. I'm just trying to make some money just to reduce my loss on this. Google. So if I sell the 125, that's 53 delta. I don't know if this is accurate. That's weird. This is such a waste, I feel. Making $150. Market. Let me just make $150 on this. This is so dumb. It's not a lot of money. I'm just trying to slowly reduce my loss. What can I do? So if we take a look at this. So this is a covered call, and this would be my naked call. So this is risky. If Google goes from 110 to 125 by this Friday, I'd end up being short shares, but that's a risk I'm willing to take. I think I'll be fine. It just sucks to see I make, to make back $7,800 loss, like, $150 at a time. It's just not very efficient, which is, what can you do? I'll show you what I've been doing on Tesla. I don't like the way Tesla groups the way Questrade groups my options. So I sold a vertical, so 305, 330, losing money on that, which is fine. I'll manage it. What I want to do is roll this one out. So this one's in the money at 286. And I'll try to do, what is this diagonal call? So 1, 2, 3. Buy back the exact one you sold. What is it? 286. So I sold close to the money. I thought I'd have more room. I thought I'd get, a little more luck on my side, which is fine. So what I'm doing here, I'm rolling it up from 286.67 to 290. And I have 300 shares, pretty much 3 contracts. So 290 minus 286.67 times 300. So I'm making another $1,000 if I get called away. And I'm only going out 7 days to buy myself more time. So I'm going to do it for a credit. So this will be breaking even, buy to close, sell to open. That's how you know you're doing it properly. I'm going to wait a few more days before I roll these out. I know it's like close to the money right now. Right now says no, it's not in the money. So like I'm not really worried, but I'll just focus on this a little bit later. Google, so I did this. Square, let me show you what I'm doing on Square. I have covered calls on Square for this Friday at the 75 strike. The reason why it says I'm up $10,000, I'm not. I was just rolling it, so it is a little deceiving. If I sold Square calls for like a month out, just like the amount I'd make on them is pretty crazy. If I sold at the money, I'd be making another $4,800 minus this. Okay, let's say $2,200. I'm not really sure. Maybe if it goes in the money, I might just like lose the shares and just get it called away. So right now it's just like right at $75. Not sure exactly what to do here. Like if I do 6.2, This is $4,300. I don't know. I don't really know. I might just leave this. I want to see what happens in the next few days. If this goes past 75 and I'll get my money back. So 75 strike times 700 shares. I'll get $52,000 back. And then maybe I'll start selling puts. So I could sell a put at like the 65 strike for a month out, which is, see, it's just such high premium. The returns would be pretty good. So I can reduce my risk. I might wait a few days before doing this. Yeah, this is kind of boring. I'm not doing any like fancy trades for you guys. I'm wondering, maybe I'll see if I could open something up just for fun. AMD, I'm waiting for it to go down. I could probably do SPY spreads, but that's kind of risky. Okay, I don't see any other trades that I want to do. I haven't been actively seeking or looking for something. I just wanted to roll in this video. I haven't done a trading video in a while, but I think I'm going to end it here. My French press is almost ready. Let me know if you have any questions. Thanks for watching, and tune into the next one.